Okay, so here we go again. Welcome back to another edition All In Metals. As you know in my last video, and obviously if you weren't living under a rock this past week, we had quite a bit of market data come out with the Fed moving rates up 75 basis points, pretty much as expected. But the wild card, of course, was the GDP, which again I had indicated we were likely in a recession. And I think my last video, or certainly had been pointing that direction anyway, as many have. And of course now as pundits try to recalibrate and redefine what a recession is. It's kind of comical, but that's where we're at in the world we live in. So, but we did have a negative 0.9 GDP following a 1.6, so that is two negative quarters by technical definition. And I realize the NBER will have to come out and provide that specifics around when a recession has or hasn't started, but I think we're all living through it and can feel it. And all things in the markets, not only here in the United States, but also across the world, are slowing. People are feeling the pain and the pinch. Debt across the world has climbed to ginormous amounts. That basically can't sustain higher rates. So again, you guys watch other videos and things to that effect. I won't go into that too much, but just to give you a quick sense too of the markets ending Friday, you can see from the screenshots here that the Dow was up almost 1%, S&P also up 1.5, NASDAQ 1.8. So then we have turn into commodities, basically a huge jump in commodities over the past week and certainly the last couple days, showing a massive rise of about $2. Looking at silver, which is huge, and again kind of points to what I just said, or going to say, or did say in my PSA about 2.5 weeks ago, that we could have seen or could see a bottom at the $18 level, which I think also applied to the gold at about 1700, about a similar floor, if you will. The miners and refiners, etc., because the price becomes too low. So what that current bottom is, it's hard to say. It's probably higher than it has been in the past due to the inflationary story, and of course with fuel prices up, etc., that's caused increased production costs. So we could be there or very close to that now at silver at even close to $18 an ounce. So treasuries this past week, surprisingly, are going lower. The Fed's raising rates, yet the treasuries are falling. I think this speaks a lot to a couple of YouTubers I watch, which my channels are indicated, Gregory Monterino and Reventure Consulting. If you haven't taken a gander at them, please do. I follow them. I really resonate with what they talk about in their videos. Gregory Monterino would state that this is a case where the Fed is in buying everything. They're in there buying the stocks, as well as buying treasuries, which of course inverse relationship there. The yield falls when treasuries are being bought or demand is high. It could be some flight to quality, but it's hard to say there. But certainly seems like some big entity out there is certainly buying a lot of everything, and I think this is a way to help control markets and try to give that sense of calm where there shouldn't be, given the current landscape that we're in and where we may be headed. So again, this is where the owning of physical metals is very, very important. Become your own central bank, even to whatever level that can be, whether it's small, medium, or large. Owning something allows you to have some of that physical metal in your possession, not the paper trades. As I mentioned in my prior videos, I don't really care currently where the price on the paper trades goes. Again, the 18 floor on silver and 17 on gold, could be breached lower. If we have a market implosion down the road, in the short term, then it's possible those could see some further pressure lower, but maybe all the sales of trades capitulation lower has been shaken out. It's hard to know at this point, but I know there's a lot of demand still. I think there was an article, I'm not sure the exact amount, it's something like 900,000 American Silver Eagles were potentially bought by a billionaire a week or so ago. 30 to $50 million. I'm not sure the exact number. So there's billionaires out there buying physical metal. I think it bodes well to own physical metal because again, it's the where do we go from here question, and the what if. What if the Fed is in there buying everything? Why are they doing that? Where are they getting the money? Who's paying for that? Well, I think it's you and me. So that doesn't bode well in the end. At some point in time, all this contrived market, all this stimulated market, all the quantitative easing and stimulus has to come to abrupt halt and end. Again, I still advocate that there will be a reset in the near future in the sense of monetary system, currency systems across the world. And again, the what if question here of the day maybe. What if those currencies are all reset with a backing of gold and silver, precious metals, and it's done to the tune of 100%. I know there's some speculation that some of that could, and historically has been maybe 20 or 40% backing. But what if it is 100%? I think I last heard somebody state, forget the video, forget the person, but it was something to the tune of if that were to happen worldwide, I think the price of gold would be currently, not to say it wouldn't go higher, but currently be at $44,000 an ounce. So a 22 to 25 times multiple. So you would see quite a lot, a big jump in gold, but even then a 25 multiplier on the current price of silver, and we'll just use, I don't know, $21. I mean, that's $500 plus an ounce, which gets you easily to the triple digits people talk about. Could it go even higher? What is the actual ratio of price of gold and silver? The current ratio being 80 or 90. Could that go back to where it once was when silver was more on par with gold and get down to maybe 7 to 1? What if it ever got to a 1 to 1? That would be interesting, of course. But anyway, it all points to the idea that it does make real good sense, and why I'm all in on metals, particularly the gold and silver. So it just all the cases point toward that being a storehouse of wealth, protection of asset, becoming your own bank, and where it's all going to be in the near future. So anyway, that's my thoughts for the day. It's been certainly a tumultuous week in the sense of data. I said it was going to be kind of a volatile week. It turned out to be as such, I believe. Treasuries were hammered lower. Stocks surprisingly moved higher. And of course, they actually had a pretty good month overall. But again, are we in the bear market still? Is that a bear market rally? Is it a caution of don't get fooled into buying back in? Will it fall further? Reventure Consulting did a good video on that last night, in the sense that there's periods of time where this does occur historically, and it might go up for a couple months, but then head down for another 6 months. So are we at the precipice of that? Very well could be. So again, where do we go from here, and the what if scenarios? So I'll leave it at that for now. I appreciate you tuning in, and again, if you haven't watched my other videos, please do so. Appreciate you taking a look. Thanks.